For those who have not already taken advantage of it, this week the Edgefinder is free to use and it is only available for a limited time. By this coming Monday, the Edgefinder will no longer be free to use, but we're offering a free trial to all of our audience. Public access to the Edgefinder can be found using the first link in the description down below to apply for that free access period. And it can also be found in the pinned comments section down below. Don't miss your chance to try out our tools completely for free. Let's jump into the video. Yesterday, we saw the inauguration of Donald Trump as the 47th president, returning back to office, and the markets are all over the place. We see gold actually breaking out here, gold tagging 27.39 at the time of recording this video. And actually, to my surprise, I didn't think that gold was going to make a breakout past this point. In fact, in recent videos, I've discussed thinking that this could be another topping point for gold. But again, markets can always surprise us. No matter how much you think you know, it's impossible to know with 100% certainty of what's going to happen next. Anyways, gold continues to push through this level, and from a price action perspective, this looks really strong. But here's why I'm still hesitant on getting long on gold. When we look at the Edgefinder's new US economic heat map, you can see that most of these things on the list are showing the color blue. And blue on this list basically means it favors a risk-on environment. For example, PMI numbers, which are purchasing managers indexes of key contributors to the economy, how their outlook is, that being very positive is US data positive, and GDP growth being better than forecast, that's also positive for risk-on, right? Inflation cooling, that's a good thing for the risk-on story. Jobs data coming in strong. My point is, when most of this stuff is blue, it's a pretty good environment. And good environments are not actually where gold thrives. Gold actually thrives in periods where the economy is really slowing and there's issues out there and people want to rush to something more secure like gold. This is also why, confusingly for some, the dollar index is also very strong, even though gold has been kind of holding up well as at the same time. So we see gold higher and gold and the dollar higher at the same time, which makes me a little bit hesitant about just how much upside room there is for gold, unless you get some material weakening in the US economy. But to be completely fair to price action, we've got a nice start here and a breakout of what was key resistance. If we do test into this area, if we hold that, and perhaps we get some cool economic data on the US front, there may actually be more upside for gold than I'm thinking here. When I take a look at the top setups page on the Edgefinder, you'll see that gold is getting a neutral +4 rating. Remember that +5 or greater on the Edgefinder gets a bullish rating. So we're close to a bullish rating on gold, but some of the things holding us back are, again, that US economic data. As we can see here, GDP numbers, PMI data, retail sales has been a little bit weak, but most of this data point set has been strong for the US dollar and for the US economy, which is a negative catalyst towards gold, and which is what I think is holding us back here on a score of 5 or greater, aka bullish. So I remain neutral on gold, but we'll continue to watch these economic data points, and if they do dip into the negative territory, that could be very strong for gold, and perhaps we finally see a more sustainable breakout and solid confirmation from the Edgefinder. Bitcoin is ripping higher here, and this is a trade I shared inside of our VIP room recently, and it is absolutely going crazy. If I pull up the ETF that I'm trading, IBIT, you can see here, well, let me log in. Okay, I just logged into my Webull, up $34,000 on this trade, which is absolutely crazy. Not all of my trades look like this, and of course I have losing trades that can be $5,000, $10,000 in a losing trade. So I'm not showing you this just to cherry pick only my winners, but recently this Bitcoin idea that we've talked about many times on the channel is ripping to the upside and looks very, very good. Bitcoin on the daily chart here has held this area of support, so I did move my stop loss into profit. And basically, if this fails out here, then I'm just going to lock in and take a profitable trade on this. But if we can take out those highs and continue the rally, I will continue to trail stops and see how far this market wants to run. Bitcoin is a top setup for the Edgefinder. You can see a +11 score, almost everything aligning bullish for Bitcoin. And I don't think it's coincidental that that is also why Bitcoin is looking very strong on the charts as well. And the US economy continues to look strong, and that is a good backdrop for Bitcoin. Yields are also slightly lower here today, giving a little bit more room to the upside, I think, for risk assets, as this means bond prices can actually rise. They've been in free fall recently, and at one point I was down like $5,000 or $6,000 on this trade. trade. So we've come back a lot on this TLT position. By the way, TLT is 20+ year treasury bonds, and this is an ETF that holds many of them. So I can basically be long bonds through this ETF. And again, my timing has been terrible on this, but it's a position that I don't mind holding in my account as I have a lot of exposure to higher risk assets. TLT is considered relatively low risk in terms of diversification. It offers something into my portfolio. I'm also long the S&P 500. I'm trading ticker symbol SPY here, and you can see that this trade is also very nicely in profit with a stop loss trailed in. We've got a $14,000 position floating on this one, and we take a look at SPX 500 USD. We can see here the CFD is showing a nice breakout of this downward trend line. What I'd like to see here is for this little wick to the downside to continue and follow through, taking us back to all-time highs, at which point I would look to trail my stop tighter. In fact, if we close very well here today, towards the highs, if this candle were to close right now, I'm going to go ahead and trim my stop loss just a little bit higher. I love this intraday rejection from bulls coming in and buying that dip very aggressively, and that still looks good for my position here. I continue to stay long on my S&P trade. By the way, these trades, the Bitcoin, the S&P trade, the TLT trade, all of it is being updated inside of my trading journal, aka the trade alert service that I offer. If that's something that you're interested in, there will be a link down below in the description. With the service, you get updates every time I take a position, as well as full context behind why I'm doing what I'm doing on my personal live trading account. If that's something that would be beneficial to you, I encourage you to come join us. 2025 is starting off really, really good, and I think it's going to be a great year, and I'd love to have more people come join our community. The dollar had a little bit of a slip here past this trend line that we've been discussing, but if you've been watching my recent videos, I pointed out that I think that the dollar still looks strong, even if we can break that trend line and come down and test this area. I actually think it'd be a very normal thing for the dollar index to come back here a little bit, finally get a retracement, and then perhaps find buyers and continue. But the dollar looks really strong. Again, go back to that heat map that we discussed earlier. Most economic readings continue to stay strong for the US, so the US dollar continues to be a favorite for me. Some of the more bearish readings on the Edgefinder currently are things like pound US dollar, the Australian dollar against the US dollar, and we can also see several yen crosses here. When looking at GBP USD, this is a pretty clean technical setup, as well as with the Edgefinder's technical plus fundamental reading. I like the downside move potentially if we see price continue up into this resistance point, looking for downside continuation on the pound. Noticeably, the Dow Jones also looks really strong, and I want to pick this apart here just a little bit. I've pulled up the ETF XLF. This is financial companies, and I'm also going to take a look at XLI, and you'll notice that both of these look really strong. These are sectors of the US stock market that I think could do really well under a Trump 2.0 situation. Infrastructure expansion could greatly be benefited or could greatly benefit industrial companies, and XLF is probably one of the purest plays, I think, on less regulation in the financial markets. If banks are allowed to operate with less regulation, it is a very, very positive thing for them. Now, there's controversy and stuff like that, but generally speaking, I personally think that less regulation is good for banks and energy companies, which will allow them to compete globally much more effectively and, again, grow the economy aggressively. XLF is an ETF that I really like, but I can't really buy it at these levels. I'd wait for a discount personally. Another sector I really like for 2025 is the technology sector, and specifically I like an industry within it, SMH, the semiconductor ETF that I currently have a long position on. I took an entry here, and my stop loss has now been trailed just behind this structural level of support. It's a little easier to actually see on the 4-hour chart. You can see if we switch to this view, you can see where support kind of lies, and if we break that level, I'm going to take a profit. But again, my stop loss has already been moved into profit. I've got several winning positions that are running on SMH. I'm specifically looking for a breakout through these highs. By the way, if you want to trade with the brokerage that I'm using, the link for Webull is down below in the description. It's a referral link, and if you use that link, you'll get up to 12 free stock shares when you sign up and deposit. And while Webull is only available to a select few countries, I wanted to also tell you about today's video sponsor, Vantage. Vantage Markets allows US traders outside of the United States to trade CFDs, which allows you access to trading stocks and cryptocurrencies and indices all under a CFD brokerage, all in one singular place. They also offer a generous welcome bonus to my subscribers, so check out the link in the description down below to do your due diligence and see if Vantage is right for you. A lot of times people get confused about the correlation or inverse correlation between gold and the dollar. And in today's live stream, I broke it down a little bit, centric around the US economy. Check this out, and hopefully it helps a little bit. Gold is getting a +4 reading. What's interesting about that is that a +4 reading is 1 away from getting a bullish bias on the Edgefinder. GDP numbers, PMI numbers, those came in strong for the dollar, which are negative catalysts for gold. Retail sales missed. I don't know if you guys saw the new US economic heat map. I'll look at it in a second. Labor data has also been strong. Like, here's my issue with gold. What's holding me back, quite literally, because this is how I trade, I look at the Edgefinder scoring system. Economic data for the US, very strong. It makes me more interested in industrial commodities, copper, platinum. And it makes me more interested in indices. This is my issue. When do you want to buy gold? Well, you buy it when you want, but I want to buy stocks. You have a choice, right? Stocks, gold, bonds, they're competitors with one another. If the economy is good, look at this. If the economy is strong, do you want to buy a safe haven asset or do you want to buy a growth-based asset? I'll tell you where I'm going. It's going into stocks. If something changes, and it could change, if something happens to the economy and we see the opposite case happen, where do I generally want to be? In gold. When our system picks up on growth in the economy, it goes more towards stocks. And when our system, the Edgefinder, picks up more weakness in the economy, it goes more towards gold. By the way, this is typically, how also we could swap out for most indicators here. The dollar, when the economy is really strong, the dollar is strong, and that's not so great for gold. And when it flips, right, gold, when the economy is down, right, the dollar weakens, gold strengthens. So if you ask me, Nick, why aren't you trading gold to the long side? We've got beautiful breakout. Well, we do now, but we've sat through like months of just stagnation for gold's price. I think some of this is also in response to, okay, we've got Trump back in office, and maybe some of the stuff that he's been saying is a little bit worrisome for geopolitical stuff. I know he announced he wants to do 25% tariffs on Mexican and Canadian imports. So maybe there's some drama there. But the point is, when we look at gold here, price action looks pretty solid. Not gonna lie. We've had a nice potential breakout here starting to form. And if we close like this today, technicals look solid. In fact, technicals on the Edgefinder are not our issue. Edgefinder is giving it a +2 for trend. Trend is to the upside for gold, at least the way we calculate it. We use moving averages on the daily chart. We're getting a strong trend to the upside. Cool. Where we're losing points for gold is the strong economy component. And this is important to the story. So for me, I'm going to watch gold. And if something cracks, if GDP numbers, if PMI numbers, if those numbers materially weaken, gold is back on the menu for me.
Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.